Welcome to the Tearsheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zach Miller. Today, we're diving into the world of embedded finance, a space that's rapidly transforming how fintech firms, vertical SaaS companies, and marketplaces drive revenue and create stickier offerings for their customers. Small businesses have always been strapped for cash, as their owners juggle multiple responsibilities. And as SMBs increasingly adopt vertical SaaS platforms to run their operations, the demand for integrated banking, payments, and lending solutions continues to accelerate. And this creates a perfect storm of opportunity for companies that can navigate this landscape effectively. For the podcast today, I'm joined by three industry pioneers who are riding this wave. Yoseph West, co-founder and CEO of Relay, a digital business banking platform that's reshaping how SMBs manage their finances. Saul Lax, CEO of Revenued, who's tackling the complex world of underwriting and capital access for businesses with limited credit history. And Caleb Avery, founder and CEO of Tilled, whose platform is enabling software companies to better manage and monetize payments in ways traditional financial institutions haven't quite figured out yet. In our conversation, we plot the market shift from embedded payments to the more sophisticated world of embedded lending, dig into the real-world challenges of underwriting thin-file customers, and explore strategic partnership models that are creating comprehensive solutions for small businesses. We'll examine how Relay and Tilled are implementing embedded lending through their work with Revenued and sketch out a playbook for fintech firms looking to enter or grow an embedded finance offering. And together with my guests, we've produced a downloadable playbook to help you get started with embedded lending. It's a very valuable asset. Go to tearsheet.co/embedded finance playbook and download it for free. So if you're interested in how technology is transforming access to capital and creating new revenue streams in financial services, you're going to want to stick around for this one. Let's dive in. Great. So Saul, who are you and what do you do?
Hi, I'm Saul Lax. I'm the CEO of Revenued. We have a card and a flex line designed for small businesses. We provide capital for over 10,000 customers and growing rapidly, with an eye out to the very unsteady seas that seem to be rocking small business.
Great. Welcome to the show. And Yusuf, who are you and what do you do?
Thanks, Zach. I'm Yoseph West. I'm the co-founder and CEO of Relay. Relay is business banking designed to deliver cash flow clarity. Our goal is to enable anyone to build a profitable small business across our full financial suite, checking account, savings, spend management, payments, all that good stuff.
Awesome. Welcome to the show. And Caleb, who are you and what do you do?
Yeah, I'm Caleb Avery, the founder and CEO here at Tilled. Tilled is a payfac as a service platform that's allowing ISVs and vertical software platforms that want to compete against Stripe embed and monetize the payments flowing through their platform.
Awesome. Welcome and looking forward to speaking to you as well.
Thanks for having me on.
So I think a great place to start is talking about the customer. This impacts all of your businesses. What fundamental shifts in customer expectations or market dynamics are driving financial services towards more embedded solutions? Saul, we could start with you.
That's a really interesting question. We do bank statement analysis, and when we look into banks, we can actually see, which we've done, who is using a vertical SaaS and who is not. And I would say that the large majority of our customers are very well differentiated. They're not a particular industry, they're not a particular geography. As far as size goes, they're fairly similar, which is they're doing somewhere between $30,000 to $40,000 a month to a couple of million maximum. I would say about 25% are using a vertical SaaS to run their business. I would say 75% are not, right? So we're not heavily new economy. Many of them are plumbers, carpenters, whatever. And we see that, though, as a growth curve. We see it increasing year over year, where more and more small businesses are using vertical SaaS. In that case, I think the one-stop, this is the center of my life. This is how I run my business. I would like to consume most of my services through that platform is a natural thing that's going to keep on growing. And in fact, every time I have a conversation with a bank, I'm astonished that banks don't get it and they don't see the competitive threat.
Yeah, I think the small business owners really are at the center of that shift. So my background, I was running an ISO prior to Tild. So I started doing door-to-door sales for small businesses when I was 19. Back at that point in time, there really was no such thing as vertical SaaS, vertical software. Every merchant just wanted a terminal sitting on the counter to run their business. And I was scaling up that first company. I was seeing firsthand that shift to these small business owners wanting these verticalized software solutions. And I think since COVID, there's been a pretty dramatic acceleration of the actual small business owners adopting the vertical software solutions. But I think there's been a secondary trend where the vertical software providers are moving beyond just embedded payments. And I think that's probably a lot of the topic of conversation here today, where embedded payments is really the beachhead for a lot of these vertical software providers, where they're cutting their teeth on embedded fintech. And now a lot of them are getting to that point where they have successfully monetized the embedded payments offering. And now we're looking at, hey, what else can we add to strengthen the offering with the customers and then better monetize the customer base?
Yeah, I think one of the key trends that we all benefit from is the core idea that we're taking technology that was previously only available to kind of mid-market companies and making it available for small business. I think this is a huge, this is a mega trend, right? And in that context, a lot of tools have changed for small business, whether it's their expense management, how they manage their bills, their payroll. And over time, that has become, well, two things. One, it's become a little more commoditized. And as a result, it's cheaper to actually build. So when you have embedded solutions, whether you talk about embedded payroll, embedded lending, there's opportunities to consolidate. And I think small business owners, and I think as we all do, we want as much as we can get for as little money as we could pay. And now these two kind of needs or opportunities have kind of converged. So small business owners can get that one-stop shop. And we can deliver the bundle, the financial visibility bundle that everyone's been promising for 20 years. So it's exciting to be kind of on the verge of actually, hopefully, knock on wood, delivering on that core promise.
They always talk about small business owners wearing many hats, and I guess when you can deliver embedded finance through an existing, vertical SaaS platform, it's one less hat for the small business owner to wear. Saul kind of alluded to this in his first answer. The banks don't get it; they're not quite there yet, and even the end users, the businesses themselves are still kind of old school in some of in Saul's case. Maybe each of you can kind of plot us where you think we are in terms of an embedded finance rollout, particularly as it points to embedded lending. Where do you guys think we are? If it's a 9-inning game, where are we in that rollout?
I mean, if we're any good at our jobs, we're early in the inning.
That's where you get paid the big bucks. Yeah.
Yeah, that's the answer. It's always day one. Yeah, I don't know that I have a better answer than that. It feels like there's enough maturity here where people are embedding these solutions, they are bundling. I think we're still trying to figure out, how do we bundle these solutions well and sell it as a package and drive distribution. So I guess maybe I'd put it, if I had to put it somewhere, I'd put it second or third inning in terms of maturity.
Totally agree. I feel like when you look at some of the larger examples of verticalized software platforms, whether that's a Service Titan, a MindBody, a Weave, some of those larger enterprise guys have figured out how to do embedded lending, disbursements, some of these ancillary product offerings. But if you look at the mid-market, and let's even forget about the long tail of smaller vertical software providers, those guys have not figured this out yet. And so I think for us, where we're primarily playing in this space is enabling those mid-market, lower enterprise software companies that want to have a similar offering to someone like a Service Titan, but don't have the dedicated engineers, the dedicated product folks, the operational expertise to be able to bring all of these solutions to market. And so they're looking for folks like ourselves and the other guys on this call to be able to bring those solutions to market for them. And so totally agree, early innings, and that's where the opportunity is.
Okay, so I guess I'll be a contrarian, just to make it slightly interesting, right? I think that the larger vertical SaaS companies that are the most interesting to us as vendors, as partners, where we say, hey, we can embed banking, we can embed lending, we can embed payments. I think the largest partners are already there, whether or not they have all three of our silos, right? But they have something. They almost all have payments, right? They're probably not into banking. That's probably one of the last things they're going to do to adopt. Working capital, a lot of them do some form of working capital. They figured it out. They've said, like, look, this is going to give me another, 40% at least, to my net margins. It's going to be a real driver, and it's going to be stickier than my current offering, right? So the big guys, when we talk to the big guys, it's always a competitive situation. They already have, three of the other, whatever, they may be running a formal process, an informal process. So I think the question becomes, and I exclude banking from this. I think banking really is at the second inning. Like any of these large vertical SaaSes have not yet really contemplated seriously becoming, the bank for gardeners, and specializing a banking offering for their gardening platform or something like that. But aside from that, whether it's payments or whether it's working capital, they're speaking to the world, and some of them are running very competitive processes where they say, look, give me your RFP, give me your best thing, here's your population, map what you can do with the population against that. And I think that's like at least sixth inning. I do think that you have to think about how do you reach efficiently the smaller guys, somebody who might have like the specialty parakeet shop platform with 3,000 subscribers. How do you do business with them? Like, how do you extend payments or working capital solutions to them? It might be very sticky once you get there, but like, how do you do that? How do you target your business dev guy at that? How do you efficiently onboard them? And what does that mean? Like, if I get 3 transactions a year out of them, like, was that worth that sort of activity? I don't know. What do you think?
I would say my answer is you have to work with distribution partners. And so my view is a platform like yourself trying to go target that long tail of those vertical software platforms is probably not worth the time and effort and energy that it takes to sign and negotiate a deal, get them integrated, get them onboarded, and get them up and running. But if you can work through a platform that's already offering them additional services, a la embedded payments, and we can offer them the ability to flip on these additional products sets as though it's a light switch where they're not having to sign a new contract, they're not having to do a net new integration. It's really a self-serve rollout where it's not a huge investment for any one of us to stand up any individual customer. That's at least my vision for how you're able to enable that long tail of users. Otherwise, it's not a particularly profitable endeavor for each of us to try and individually go target these guys in and of themselves.
Yoseph, what do you think?
I think we're different in this context, right? Because we're trying to be the bundle, as opposed to like feed in embedded banking necessarily. I think that that part of the journey for us is still relatively early. Like I've tried to sell in the embedded banking, like create a banking tab, have Relay be the white label, a couple of years ago, and everyone's like, yeah, sounds great. And then you kind of got crickets after that, no matter how many trainings you do of their sales team. So I think we're still figuring it out. Like right now, kind of we're seeing demand for it, which is exciting. But this for us is like, as you said, Saul, like very early, and something we're learning into.
Yeah, I look. We enjoy very much sending you leads, right? Just to be totally transparent, we're sending Yoseph. I think it's at least a couple of hundred, maybe 1,000 plus a month, because in our funnel, we ask them, do you have a business banking account? Right. And it's surprising, but like many people that are looking for business credit still do not have a business account. And we'll send them to Yoseph because they have a very refined, evolved model for small business. Easy onboarding, elegant solution. And also just, to again, being transparent, we've done this. We've looked at the very wide spread of costs for small businesses in banking. And it's astonishing. I mean, there are people paying 10x what they're paying with Yosef's company, right? And when you look at that, you just say, like, how are regular banks doing it? Well, many banks are doing it because their small business customers ignorant. They don't know what's out there. They don't know what's available. So I don't know. I'm not sure how you reach the small tail, and I don't know once you reach the small tail as a small business bank and you scale up. I don't know if you don't then have the same problems that a regular bank does, which is that now maybe the platform that they actually live their lives on, more importantly, their ERP, for that lawn mowing ERP that they live their life on now has someone who's providing banking as a SaaS, right? It would be the same as if Caleb would say, like, he thinks he's the center of the universe and now he's plugging in a bunch of other services and he's selling that as their core offering.
Yeah. I think, when we started the business, our perspective was that every platform was going to have a banking product over time, right? Like Shopify would have what has become Shopify Balance, QuickBooks would have what has become QuickBooks Cash. And we don't really see those folks in the market, just, fully candidly. It's not out of lack of respect. It's just kind of factual. And our opportunity and one that is ours to win or to lose is how do we build software against the curve so that when these platforms are delivering these products, we are just so far ahead that it's a really easy decision for us. And the question on our end, which is I think a little bit different than perhaps if we think of like an SMB lender that maybe raised a lot of capital and blew up a little bit, and had its fair share of challenges, where they ran up against a very competitive product inside the walled garden, right? They didn't have as much software to go and build. In our context, we're building a lot of software around the banking experience that will make it harder for us to lose kind of that competitive edge, or at least that's our perspective or thesis.
Interesting. Look, there's definitely a technology deficit that a large bank has. We had a conversation with a top 10 bank recently, ongoing conversation. We provide potentially a product for the decline population, which is just going to grow in a recession, right? So I said, look, great offering you got. He was telling me about what they had built for small business and that they finally were able to do one-stop onboarding. And Caleb's going to laugh at this. They were finally able to do one-stop onboarding for a bank customer to also become a payments customer, right?
Good for them.
They finally got to embed it, right? Okay, so now their own offering is embedded inside their bank, right? So I said, so great. So like, why are you not offering this to the house call pros of the world, for example, right? And I just said, like, because we can't get there. Like, every time I touch the core, it's $5 million, right? I can't.
The technology deficit for these guys is just massive.
Yeah.
And there's a second part of our business that we don't talk as much about, where we work with banks, ISOs, processors, huge fintechs that want to white label the Tilled technology stack so that they have the advantages of the Tilled technology platform with their scale, their pricing, their banking relationships, and their distribution. But when we go in and talk to these big banks and these big processors that built their gateway or their merchant onboarding tools or their dashboards 10, 15 years ago, for a lot of these guys, they haven't touched that tech in quite some time. And so they may have figured out pieces of the componentry here, but when they're actually going out to market and trying to sell that combined solution set, whatever it is that they've built out, they're struggling to be competitive in this new day and age, going and competing against a Stripe or an Adyen or a Tilled, because they don't have technology that provides that complete solution set for their customers. But that, I think, is where the opportunity exists for those of us building modern software solutions to go enable some of these more traditional incumbents that have 10x the distribution that we have, but don't have the technology advantages that we have, and try to marry the two of those together.
I do want to double click on, so we just explored embedded banking, and I want to move a little bit deeper into embedded lending. And this is really for Yoseph and Caleb. Like, how are Tilled and Relay thinking about lending as a strategic opportunity within your platforms, and what gaps in the market are you guys hoping to address?
Yeah, I would say for us, when we talk to especially our larger software partners, the first thing that they typically think about when they're moving beyond embedded payments is embedded lending. I would say in 90% of the cases when we're talking to folks that are looking at some other embedded fintech solution. Lending is the first option that they're looking at, and we've looked at all sorts of different solutions on the market. And I think the challenge that we have is that we serve such a wide variety of customers, and that's both the verticals that they service, that's the credit scores that they have, that's the capital needs that they have in the business, the capital that they have available to them. And so for us, we found that it's a product offering that's incredibly interesting to the ISVs who are looking at this as a potential additional revenue stream. It can help with stickiness and retention for their merchants. And frankly, it's something that the merchants are either asking for or demanding, depending on the vertical that they're in. And so it's something that we feel compelled to bring to the table, but we're looking for solutions that we can offer to a wide variety of verticals and merchant types to serve all of those needs.
Yeah. I think on our end, it's pretty obvious that small business owners struggle with cash flow, right? I think it's 62% of them hit a cash flow crisis over the course of their life. We have a report that we publish called the Cash Flow Compass. And 91% of the small business owners that we work with, or that shared information during this report, face a serious cash flow challenge, and most never see them coming. Is the challenge, is the issue, right? So it's like a surprise, a wonderful, painful surprise. So for these small business owners, lending could just be like a huge unlock. It gives them access to capital in like critical moments. And that's, I think the big challenge that Main Street faces is how do you actually get loans quickly? I think there's still, for better or worse, a belief that if you have a relationship with someone at your bank, that's what's going to get you the loan. Right? Like I know, Joe or Jane down the street, I'm going to go there and I'm going to get a loan because they know me. That isn't, I think, as true as it used to be. And now as we step into the future where, it's fundamentally based on the quality of your business. We can underwrite based on your cash position, based on your cash flow. And I think that's the opportunity for someone like Relay to be able to bundle in services, like Revenued. As Saul mentioned, we're partnered with them. And be able to actually give our customers more variety and flexibility in lending options, as well as with our digital banking solution.
So, Yoseph, you kind of just touched on it. My next question was given those gaps that you and Caleb both described, how did that prompt you to reach out or to work and collaborate with Saul at Revenued?
Yeah, so for context, Revenued gives Relay customers revenue-based financing. Mm-hmm. So these businesses might not have strong credit just yet, right? They're probably earlier in their journey, but have some solid kind of revenue streams. I think we started to explore lending just generally kind of earlier this year and figure out what partners could we find. And Saul, all credit to you and the team. Revenued was a pretty obvious choice from our perspective. Really strong product, would work well for our customer set was the other piece of it. And we've seen good traction. We're testing it with our customers, and they're really responding well.
Yeah.
So how about you, Caleb?
Yeah, I'm sorry. Go ahead. I would just say
no. I think
it's a challenge. I'm sorry, Caleb. Go ahead.
Finish your thought.
I was going to say it's a challenge for you, Caleb, as well as you, Yusuf, which is that there's probably no one single capital solution that does it. So when you're thinking about, especially in your case, Caleb, you want to show up at a potential partner and say, look, here's the full box solution. I could bring you payments, and I've also had, these two embedded lending partners, and here they are. You're looking at what spectrum does it cover, right? What's the customer needs, right? How much of it does this particular partner do? What's the level of satisfaction because you're the face of the partnership, right? You're the head of the alliance showing up and saying, hey, here's the value package, right? How do you sort of assemble that? It's the same for a vertical SaaS company. When we go into some of these competitive situations, right? They are layering in, 2 to 3 what they think are best of breed lenders to wrap as much of their population as they can. Usually where we're invited in, they have somebody there who was into vertical SaaS before we were, and they're servicing, 20% of the population. And their problem is if somebody needs a lot more capital or somebody needs a lower FICO score, it doesn't cover, right? Which is not good for the customer. Ultimately, the customer wants to see in the dashboard. If you ever looked at the Reddit threads for Shopify or Capital or similar, there's a lot of unhappy people who are going like, hey, how come I didn't get an offering in my dashboard, especially if it's available, right? How come I'm not one of the chosen few being offered capital? So these are some of the complexities that you sort of have to figure out as you're putting it together. I'm sorry I interrupted you before.
I think you're exactly right. That's the way that we think about these sorts of partnerships. And it's the same way that we approach payments. For us, we always knew that one processor and one bank wasn't going to be able to service all of the types of opportunities that we wanted to be able to bring to the table and service from an embedded payments perspective. And we're taking the same approach as we look at a lot of these other embedded fintech solutions, where we're not wanting to go build these things from first principles. We're wanting to partner with several different organizations that can serve the landscaper, the attorney, the dentist, the restaurant, you name it. And for us, I think that's been one of the bigger challenges as we've looked at this sector, is there is no one solution that makes sense for the landscaper with a 550 credit score and the attorney with an 800 credit score, or the contractor that takes $150,000 payments versus the ice cream shop that has a $6 average ticket. And so for us, just given the variety of partners that we work with, we know that we need to have a network of solutions and partners to be able to service that base. And I think what you guys have available is incredibly compelling and very differentiated from a lot of the other primarily MCA-based offerings that are available to the small business owners today.
Well, it was designed as an MCA replacement, so thank you.
For businesses with thin file or limited credit history, like what alternative data sources are and proving most valuable in your underwriting approaches?
I can go first.
Go for it.
Us, yeah, it's obviously their annual revenue, years in business, and then honestly, it's the transaction data that we have on them, right? Because they bank with us, we love to see that they've connected a revenue source. We can see the consistency of those deposits. Mm-hmm. It's also helpful to see if they're running payroll through Relay, right? So if they have a payroll solution like Gusto connected, those are kind of alternative data sources that we've started to leverage.
Caleb, because
all you guys want to address? Yeah,
I got to make a speech, so you might as well go first.
All right, I'll hop in there. I think for us, we have been trying to look at sources like Plaid as well as social proof on the owners as some alternative streams for us, where especially if you're looking at brand new businesses, if you're looking at the traditional methods, it can be really difficult to come in and underwrite these businesses. And so for us, as many different data streams as we can get access to and plug that into our credit risk process, I think the better.
Okay, so I don't know if you guys were around in Cabbage days. Do you remember Cabbage? Right, the CEO of Cabbage always used to get up and speak about how they have models running off of UPS deliveries. I don't know if you remember that. I always used to laugh. Anyway, it's not for the faint of heart. It's really hard putting together, models that work in scale quickly for very large populations. Like, we've done billions of this, but we're still scared, right? We know people in the business who have blown up and had to be recapped. We know people who have gotten close to the water. Models are great, but when things get discontinuous, models break down. Like, we're headed to something that I don't think anybody's seen, because COVID was, it's a very atypical event. And during COVID, we ended up doing a lot of PPP, which was, the reason why the company made it. But I think we're about to enter a recession. It looks like it. And small businesses do not cope well with inflation, right? So if it's coupled with inflation, it's certainly going to be very challenging. Just anecdotally, there's stuff that's obvious to all of us. We received a $500K credit application by a solar installer, right? A solar panel installer. We would have said yes to that 30 days ago. Today, where are they getting their panels from? right? Are they out of business, right? If you have a trucker whose most of their business was around the ports in California, right? What is their economic life now, right? If somebody was doing retail, they had a kids store, right? Anybody who is doing, baby furniture, baby furnishings, anything of the sort, is right now sitting there going like, should I just give it up and go do something else? There's a tremendous amount of
whole world's been turned upside down.
Tremendous amount of uncertainty. So, like, confidence even in models that we've used to do, billions of dollars worth at this point. We're looking at everything, carefully, right? At the same time, we've had our best month ever this past month in terms of origination numbers. But, I wouldn't be evolving a credit model from scratch, today, using any of the stuff that you're looking at without having had a lot of experience, in lending for the last 5 years. We've done billions of dollars of this stuff. Doing this from scratch today, I think, is really scary. I don't mean to, I'm not saying this to scare you or prevent you from doing it, like run your models, as they say. But it's going to be a very challenging environment. It's going to be a great environment to be able to help small business and provide capital. But it's going to be a super challenging environment to pick carefully between what's doable, what's not doable. I don't know. Do I sound too scared? I don't know. What do you think?
No, I think you sound like someone that's been through a few cycles.
I was going to say that's coming from experience and some battle wounds. And I know on our end, the way that we think about our risk and underwriting model is that it starts with the ISVs and being picky about the actual partners that we choose at the software company level. So is this a vertical? Is this a space that we want to even entertain before we ever underwrite that first merchant? And I think that's been one of the lessons for us over the 6 years that we've been doing this, is that the best decisions that we've made have actually been saying yes or no at the software company level before it ever gets into that merchant level filter, just to make sure that we're aligned on who we actually want to partner with.
Yeah.
I want to take a question in a little bit different direction. Both Caleb and Yosef, you both mentioned you're packaging lending in alongside other services, obviously, and I'm kind of curious what kind of challenges you're encountering as you're beginning to connect lending capabilities with payment and banking specifically.
Yeah,
Caleb, we could start with you.
I would say from our point of view, going back to what we were talking about earlier in terms of certain solution sets make sense for certain verticals. Mm-hmm. I think that's been one of the things that we've been trying to be thoughtful about as we're having conversations with whether it's pipeline customers or existing customers, is trying to set the right expectations and only advertise the solution sets that actually make sense for the right partners. And so there's a level of thoughtfulness even on the go-to-market side to make sure that we're putting the right solution sets in front of the right customers. And for us, that gets even more challenging when we're going to market through enterprise partners. And so we're having to explain to the enterprise partner, who then has to explain to the vertical software companies or their sales team selling to the vertical software companies. And so there's a lot of education that goes into the actual go-to-market process for us. So just building and doing the integration honestly can end up being the simplest part of all of this, but having to go train the teams and educate our referral partners and channel partners on how some of these solution sets will work, I think ultimately becomes the bigger challenge, but also the bigger opportunity.
Yeah, I think similar themes on our end. Awareness is certainly like the next big hurdle. Figuring out where to direct that effort and intention is the hard part. Mm-hmm. As Saul mentioned, like look at all the wonderful folks on the Shopify Capital thread where they're saying, hey, like, why not me, right? And so as we're testing into this, we are being very selective around where we tap our base to figure out what's going to work and what might not. So I'd say we're very much in an experimental phase, but starting with great partnerships like Revenued, and seeing what kind of uptake we get in that context.
Saul, I have a question for you. I guess this is the inverse of a question I asked earlier. Can you share some early learnings or feedback from your partnerships with Relay and Tilt that might shape your approach at Revenue for embedded lending going forward?
Um, yeah, I struggle sometimes whether the referral model is worthwhile getting started with. I think the biggest challenge is what's going to be the response rate if you just put up on somebody's marketplace, right? If somebody says like, hey, we're not embedding you in the flow, or you're not going to be up there on the dashboard, maybe we'll do one email link. And we've had the same experience where we say, okay, I'm going to partner with somebody doing business insurance. Let's offer it as a service to our customers, and let's see what the take rate is, right? So on the one hand, if it's not truly embedded, you're both going to have a little learning, which is, is there appetite for this, and is it a fit or anything like that? At the same time, you're really going to have like a very suboptimal experience, right? You're going to have on both sides, you're going to say like, look, they just sent out an email. The response rate wasn't bad based on email marketing. It ended up with, X number of applications. None of them were in the zone because it was a blanket email, or it's up on the marketplace and it's just there. So I guess the thing that I still struggle with, it's too tight to call it a learning, is whether you invest in anything that's incremental, that's an initial, just like very early, and say incrementally you'll build on that, versus just saying, look, that's not really a threshold experience where you're both going to be able to figure it out. Like what I'd rather almost always have is give me blank data, like give me bank, data of your customers. I don't need to know the identities. I'll come back and tell you exactly what we would have done with it, right? Or I'll give you a model that can live on your side of the fence. Run the model on your population if you have the data. I can tell you is like we have a 70% take rate when we offer capital to somebody. And I can show you charts and tell you basic characteristics as to, when we're going to offer. But if you actually want to run it against your population, that would be the best thing to do. And once you do that, then I'd say, look, put it in an API, or else I'm probably not interested. Now, my biz dev guys aren't saying that. They're going out and saying like, hey, give us a referral link and let's do that. And okay, God bless them, right? But like, for me, I'll let them do that. But like, for me, seriously, like for me to take it seriously as a partnership, I'm really looking at, in short order, we have the data, you have the data, you know what the fit is, and then the economics just slot in fairly easily. Like it's a good product to have.
I think the question is whether you're trying to align for concept market fit or product market fit. And I think about the two things a little bit differently. I think the value of the referral model can be to test the assumption of, are the vertical software companies that we're partnering with interested in offering a capital product, and can we get them to successfully sign up for that offering? And I think that is something that you can test in the referral model to say, hey, we've got, whatever it is, 100 software companies. We went out and did this offer. 30 of them responded positively and said, yes, we want to go offer this capital solution. But I would agree that actually trying to drive scale to the SMBs of an embedded lending program through a referral model is an incredibly unlikely to be successful solution from my experience, but it can help build conviction that you have the right partner, you have the right customers that are interested in the offering, and then you can build the conviction to go spend the time to build that more integrated offering that's more likely to drive scale.
I don't know.
Yeah,
go ahead, Yosef. Sorry.
Yeah, sorry. I agree, because it's not just, hey, can we actually underwrite these customers, right? And are there enough of them to make it worth our while? It is also how many of those customers are actually going to be excited by the offer, right? And before, like, and hey, you might be like, Salt, look, it's revenue and it's an amazing product.
No. Forget about revenue. Who doesn't want working capital? What small business is not looking for working capital?
I think I hear you. But I think there is a reason there's kind of like a crawl, walk, run towards partnerships generally, right? It's like, let's test it out. Let's get to know each other a little. Because it's not just like, does the math work? Are the rewards, is it worth doing? It's also like, how do we work together? How does this feel?
You're building
Customers really care about these things.
So that I get like, okay, before I take the risk of exposing you to my customer, right? I want to know what I'm doing. Like, I want to know who you are. Just like Caleb suggested, it's the ISOs he's dealt with, or the software companies he's dealt with, or walked away from it, which have been critical credit, conversations, right? But I'm talking about something else. I think it's self-evident, whether it's us or someone else, that working capital solutions is attractive to anybody who has a small business base. Like, they need a working capital solution, whether it's us, it's someone else, or it's the Bank of Podunk that they managed to get like an SBA program or whatever. It's like, what small business does not want working capital? Like, what do you have to test?
Yeah, well, I mean, here's the thing. What if our uniquely, like, let's say theoretically, obviously this isn't true because we send customers to you, they love the loans. But let's say our customers are, for whatever reason, predominantly in that 30% that don't take the loan offer for some reason that we just don't understand. This wouldn't be the first time that we've been like, here's our assumption. We went to market and we were
They're
wrong.
taking someone else's capital. They're taking someone else's capital.
Why so?
Because it's cheaper, because the sales guy was better, because it came with free points, whatever the reason. But all I'm saying is that I don't think there's any need to test the conceptual working, just like there's no need to test the small businesses need payment solutions. Yeah, they all need.
But is it the right payment solution? Is it the right lending solution? So to me, I think that's what you're testing out here is, does the offer actually make sense to the end consumer of the product that I'm selling this to? Does the technology function as expected? Operationally, is this a great partnership, or is this a dumpster fire? Do we like working, with the teams together? And so I still think that there's a lot of assumptions in there that you can test out successfully to see, is there merit in that specific partnership? But take your point on the fact that capital in general is needed by small business owners.
Look, it sounds to me like the argument, find the analogy that I've had with my wife many times on whether speed dating works. Okay, I'm married many years. It's not my speed dating.
Who wins that argument?
Right? The speed dating works.
I was curious about that.
Right?
Yeah.
Is it speed dating? Does speed dating work? Like if our kids we meet somebody for 10 minutes and everything like that, boom, 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 boom. It's a fit, it's not a fit. And she is like you, like she's saying like, no, unless you sit and you meet the person, you talk to them for a real amount of time, you really get to know them. You didn't meet them. You might just say like, oh, I'm turned off in 10 minutes. It's not a real engagement. You know very little in the 10 minutes that you knew beforehand. But anyway,
speed dating can definitely get you to a no. Would be my point of view.
Okay.
So maybe that's the compromise here, is that if you're just looking to get to the no, maybe that'll work. But I tend to be in her camp.
What do you? I'm sorry. Go ahead.
Please.
What do you think? What do you think about just the broker platforms? Right. So there's numerous broker platforms that have assembled what they say is like best of breed. So they'll go to someone who owns a customer, will say, look, I have 4 payment companies. I got 3 business insurance companies. I got 4 neobanks. I got 1,100 lenders, right? And, we have a couple algorithms as a front end. Just hook them up and boom. Like, obviously, you're going in a different direction, whether or not you're also represented on these platforms. I mean, we get some deal flow from them. But what do you think is the better thing for a vertical SaaS company to do, or anybody? Hook yourself up to one of these marketplaces or try and assemble it yourself?
I would say from my vantage point, a lot of it comes down to what that customer experience looks like. And from our point of view, the way that we're thinking about our role in all of this is that we are that orchestrator looking to bring multiple partnerships to the table. But it's not as though each individual merchant or even each individual software company is going to be aware of the fact that there's 3, 4, 5 different options behind the scenes. And so I think if you can effectively abstract away that complexity of some of that decision-making process, whether that's from the software company or from the merchant, I think the model can make a lot of sense. But I think you can also just as easily overwhelm that end customer or partner with too many options and too much complexity where they just throw their hands up and say, hey, I'm just going to go talk to Joe down at the bank because I don't understand all of these terms. I don't understand all of these different offers. I'm not sophisticated enough to make this decision for myself. And so to me, it all comes down to what that customer experience is like and whether or not you're choosing to present all of those different options to the customer.
Interesting.
How about you, Yusuf?
I think it's something we're actually actively exploring. Like, would we do a lending marketplace and what would it look like? I think starting with partners is probably the place that we're obviously doing that today, and we'll probably extend that. What that ends up looking like for these small business owners, I'm not sure, right? Like, you don't want to give them a laundry list of options. You kind of want to choose your partners that you trust, that you know are going to deliver a good experience. I'd say we're still early in that journey and trying to figure out what's going to work best for them. But it definitely feels like there's an opportunity here.
It's interesting. I was on the phone this morning with the CTO of a large payments company, and they're investing heavily in AI because they believe that the ability to do intelligent routing, right, is going to be a key differentiator. And then we were speaking about, though this is not his particular area, in small business, what you just described is intelligent product selection as well as dynamic routing for everything that we've discussed, the different silos. Is that going to become a real thing? And in that case, do you sort of, Caleb and Yosef, do you sort of become like an AI routing company or advisory company for the small business that has plugged in all these different things, rather than being the particular vertical that you are?
We think about it from a data orchestration perspective. And so we're taking in the data from the customer that's transacting. We're deciding which processor or bank to place that transaction on. But I go back to the comment that I made earlier about abstracting away that complexity. And I'm sure that's exactly the way that CTO of that large payments company was thinking about it, is they're going to handle the rules. They're going to handle the algorithm of which transactions get placed where. If they want to add or subtract options from that network, they're the experts that are managing that piece of the pie. And so I think there's a lot of credence to that idea of we're the ones that are deciding what the options are that are available. We're the ones that are making those decisions, whether it's humans or AI, on how to route those transactions. But at the end of the day, the goal is to improve the experience of the small business owner or the end customer and add value for them without them having to actually understand the tangled mess of things that are happening behind the scenes to enable that transaction to go through.
I think the thing we've spoken a lot about internally is this idea of building the CFO in your pocket for every small business owner across America. And I think in that context, there's a lot of opportunities to provide quote unquote smart advice through AI and actually be that financial partner to them. I don't think the kind of routing of transactions necessarily applies in our context as much as it applies in the context of like when we're making a recommendation or saying, hey, we think you would need a loan at this point in time because you got payroll coming up and it looks like there's not quite enough cash or something like that. That could be useful. But I think in that context, we're probably just surfacing one option, right? It's much easier for them to make a decision in that context versus them seeing three and then having to try and make a buying decision. That's probably imperfect to begin with.
Interesting. The use case that you suggested is a very prevalent use case, and why payroll companies are very interested in embedding working capital, because that's one of the key points of failure. Somebody goes to make payroll and they realize, like, oops, I'm really going to have to struggle and make payroll this week. Yeah. It's probably the largest single use of the line that we see.
Makes sense.
Interesting.
Saul, Yusuf, Caleb, it's been a great conversation. Thanks you all for joining on the Tearsheet podcast today.
Our pleasure.
Thanks for having us on the show.
Thanks for having us.